It's 10 a.m. in London, 11 a.m. on the continent. Investors cut risk exposure over default and downgrade concerns in the US. Germany adds to investor worries about euro debt crisis contagion. European shares falling for a third straight session as deep divisions in Washington leave lawmakers scrambling to find common ground ahead of the August 2nd deadline for raising the borrowing ceiling. Financial stocks among the top losers. Shares in Spain Santander falling after first half profit takes a hit from payment protection insurance claims in Britain. Shares in German car and truck maker Daimler also down after cooling emerging market demand leaves revenue short of expectations. Bunds extend gains and Spanish and Italian government bond yields rise after German Finance Minister Wolfgang Schäuble says Berlin is against giving the Eurozone's rescue fund carte blanche to buy bonds on the secondary market. This raises concerns that last week's great bailout plan won't be enough to stop contagion to bigger economies. And the euro gives up some ground against the dollar after those remarks. The greenback earlier sank to a three-month low against a basket of currencies. Well, there's still no signs of the panic that could be sparked by a US default. Most investors remain confident that a deal will somehow be struck, but a Reuters poll shows a majority of investors think the US will lose its top-notch AAA credit rating from at least one major ratings agency. In that event, Standard Chartered's head of Greater China Research, Stephen Green, says China would try to speed up diversification away from dollars and into euros.
Even if the US gets downgraded, it's still one of the only two big liquid bond markets out there. And so if you're getting $30 billion new assets under management every month, you still really only have the euro and the dollar market to go and look at. So if there was a downgrade of the US debt, I think you'd probably see much greater interest in the euro.
Well, more on currencies now with our FX analyst, Jeremy Bolton. Jeremy, Eurozone debt crisis, that's undermining the euro. Dollar's problems underpinning the yen. Does that make euro-yen the trade of choice here?
Well, I believe so, yeah. I think that in terms of an exit from the US or some flows, investors looking for somewhere else to put their money, the Japanese bond market substantially large enough to take some of the liquidity exit from the US. No one market is obviously anywhere large enough to take the potential outflow of dollars, but the yen is benefiting on that basis. And in terms of the euro today, we've seen quite a sharp widening in Eurozone spreads. There's clearly a lot unresolved about the Eurozone. People are clearly not happy with the situation. So whereas euro-dollar is being pushed higher, I think there's a good chance that euro-yen could come under further pressure. Technically, it's also on a downtrend, and there's a very large Spanish bond redemption in the market this week. And I think that we could see some flows generated on the back of that, possibly repatriation into Japan.
So euro-yen around 112.5. Where do you think it's going?
I think it could go to 110 potentially in the short term. On the top side, 113.60. If we went back above that, technically that would be bad news for guys who are selling short. But I think there's, looking to sell strength ahead of that for a 110 target as a trade short term. The
Aussie's the other story that's in the FX market today after a surprising jump in inflation data. A lot of the market had appeared to have been moving short, expecting some kind of rate cut. That's now completely off, you think?
Well, unless there's some kind of huge, obviously if there's a US default or default in the Eurozone, that could spark people talking rate cuts again. But in terms of just the Aussie picture, fundamentally now people are talking rate hikes. You've got some banks talking rate hikes in November. That was the bigger risk, really. People had started to go underweight Aussie. Some people had squared up completely. There was priced in cuts in the market. That's been thrown completely out the window. You can tell by the pace of the rise of the Aussie shows how the market clearly either got short of it or were not sufficiently long. Now there's a lot of talk that people are still underweight, and we're going to see a heavy demand for Aussie into month end, especially from corporates. And I think the top side still is the vulnerable side. I mean, people are talking 115 potential now. I don't see why not.
Right, Jeremy Bolton, thanks very much. We'll leave it there. Well, that's all from us for now, but we'll have more on the results from Daimler later when I'll be speaking to Chief Executive Dieter Zetsche. That's at 12:52 London time on Insider. I'm Nick Edwards, and this is Reuters.